Hey everyone, welcome back to our channel. Today, we're breaking down the financial strategies of the Reserve Bank of India, or RBI, and uncovering how it generates enormous profits. Recently, the RBI approved a record 2.11 Indian rupees lakh crore dividend payout to the central government for 2023 to 24. By the end of this video, you'll understand the top 5 ways the RBI fills its coffers and why it pays a dividend to the central government. Let's get started. First up, interest on government bonds. The RBI holds a substantial portfolio of government securities. These bonds pay interest, which is a significant revenue stream for the RBI. Here's how it works. The government issues bonds to raise funds. The RBI buys these bonds, essentially lending money to the government. In return, the government pays interest to the RBI on these bonds. This interest income forms a stable and substantial part of the RBI's earnings. It's a win-win for both the government, which gets the necessary funds, and the RBI, which earns steady interest income. Next, let's talk about foreign exchange reserves. The RBI manages India's forex reserves, which are huge holdings of foreign currencies, gold, and other assets. These reserves serve multiple purposes, including stabilizing the currency and paying for imports. But they also generate income. The RBI invests a portion of these reserves in safe and liquid foreign assets, like U.S. Treasury bonds. These investments yield returns in the form of interest and dividends. The prudent management of these reserves not only ensures economic stability, but also contributes significantly to the RBI's profitability. Moving on to open market operations. OMOs are activities where the RBI buys or sells government securities in the open market to regulate the money supply and control inflation. But these operations also bring in profits. When the RBI buys securities at a low price and sells them at a higher price, it earns a profit. These transactions help manage liquidity in the banking system, ensuring there's neither too much nor too little money in circulation. Profits from these operations are a byproduct of the RBI's primary goal of maintaining monetary stability. Fourth on our list is Seigniorage, which refers to the profit made from printing currency. Here's the breakdown. The cost of printing a currency note is significantly lower than its face value. For example, if it costs 2 rupees to print a 100 rupee note, the RBI effectively makes a profit of 98 rupees per note. This difference, known as Seigniorage, is another key source of income for the RBI. It's a fascinating way the central bank generates profit while performing its core function of issuing currency. Finally, the RBI provides various banking services, which also contribute to its revenue. It acts as a banker to the government, managing its accounts and transactions. It offers services to commercial banks, including clearing and settlement systems, and charges fees for these services. These fees, while not as large as interest income or seigniorage, still add up and contribute to the RBI's overall revenue. Now, why does the RBI pay a dividend to the central government? The RBI, as a public institution, earns significant profits through its various operations. At the end of each financial year, after meeting all its expenses and maintaining adequate reserves, the RBI transfers the surplus profits to the central government. This dividend helps the government in various ways. It contributes to the central government's revenue, helping to fund public welfare programs and infrastructure projects. It reduces the fiscal deficit, aiding in better financial management of the country. It supports overall economic stability and growth. This transfer of profits is a standard practice followed by central banks globally, ensuring that the profits earned by a public institution ultimately benefit the public. So there you have it, the top 5 ways the Reserve Bank of India makes its money. Interest on government bonds, returns from foreign exchange reserves, profits from open market operations, seigniorage from printing currency, and fees from banking services. Plus, we've covered why the RBI pays dividends to the central government. Understanding these revenue sources gives us a glimpse into how the RBI supports the economy while generating significant profits. If you found this video informative, make sure to hit the like button and subscribe to our channel for more insights into the financial world. Thanks for watching, and see you next time.